Well, it's the earnings season, so in Ideas for Profit today, we thought we'll talk about TCS. I'm Ridhima Bhatnagar. The question that we're asking is it time for investors to look beyond optically expensive valuation and focus just on earnings as well as opportunity? Is TCS more a stock to buy on any decline rather than to sell on a rally? That's the big message coming from the bellwether technology company's strong performance for Q3 and FY21. Despite implementing a delayed wage hike from October that shaved off 160 basis points from operating margin, the company's clocked up the strongest December quarter performance in the past 9 years. Remember, this was a seasonally weak quarter, and yet the company has managed to surpass expectation on most count, and the stock has underperformed the benchmark in the past 3 months. The fundamentals behind optimism. What are the fundamentals that have made the Indian IT behemoth turn the corner and be back on the growth track? Now, after 2 consecutive negative year-on-year growth in FY21, the company has tipped the scales and reached positive figures in Q3 ahead of its own forecast. With revenue at $5.4 billion, a sequential growth of 5.1% and reported 4.1% in constant currency, the company has witnessed a broad-based progression across verticals and geographies. Now, operating margin has also showed a 40 basis point sequential improvement to 26.6%. On a sequential basis, the key markets of North America, United Kingdom and continental Europe also grew by 3.3%, 4.5% and 2.5% respectively. All the 7 industry verticals showed positive sequential growth, with the BFSI, the banking, financial services and insurance, which contributes the maximum share of 31%, along with life sciences and technology services, which was back in the green. The other positive takeaway from the company's performance is the increase in size of deals and its heterogeneity. Also, despite a drop in the total revenue deals compared to the 2 previous quarters in the current financial year, on a year-on-year basis, the total value of deals in Q3 increased by $0.8 billion. The company is expecting its robust book order to continue, has hired 15,721 employees in the quarter to fulfill its future obligations and tap on new opportunities. Attrition stands at an all-time low of 7.6%. What are the factors to be concerned about as far as TCS is concerned? Though the positive growth at 0.4% is a welcome break after 2 consecutive quarters of negative growth in FY21, the company is far from matching the double-digit growth figures that it clocked all throughout FY19. Even the total value of deal has been less by almost $1.8 billion on a quarter-to-quarter basis. A big deal in recent times has spilled over to the new year, thereby suppressing the deal win TCV, total contract value, as well. Verticals such as retail, communication, manufacturing and regional markets are yet to report growth on a year-on-year basis. Does the future then look bright? With the pandemic being a catalyst to facilitate large-scale migration to cloud platform, the spend on technology is only going to accelerate as enterprises are spending on technology for growth and business transformation, as well as for operational transformation to boost operational efficiency. And TCS is all set to corner the benefits with a strong client relationship, vendor consolidation, investment in transformational technology and focus on talent development.